Adjusting entries for bad debt expense. Bad debt expense is an estimate of the portion of credit sales or accounts receivable that the company does not expect to collect. The adjusting entry to record the estimate of bad debt expense is as follows: debit bad debt expense, credit allowance for doubtful accounts to record bad debt expense. Of course, the year-end entry is only an estimate. The year-end balance in allowance for doubtful accounts becomes the next year's beginning balance. Bad debt expense is closed out at year-end with all the other revenue and expense accounts. Assume that on December 31st, 2018, your company's first year in business, you record the following adjusting entry for bad debt expense. December 31st, 2018, debit bad debt expense $5,000, credit allowance for doubtful accounts $5,000 to record bad debt expense. Your company's 2018 ending balance in allowance for doubtful accounts is $5,000, and its 2019 beginning balance in allowance for doubtful accounts is the same, $5,000. The key word is doubtful. This is the amount your company thinks you will never collect. During 2019, as it is determined that particular customers will not be paying their bills, you move the appropriate amounts from the doubtful category to the sure category. Assume that on March 3rd, 2019, Lousy Co. goes out of business, and you determine that your company will not collect $1,250 due from Lousy Co. You must move the $1,250 from the doubtful category to the absolutely uncollectible category as follows: debit allowance for doubtful accounts, $1,250. It is no longer doubtful. It is definitely not being paid. Credit accounts receivable, $1,250. Remove this uncollectible from accounts receivable to write off uncollectible accounts. Assume that your company's allowance for doubtful accounts during the first half of 2019 appears as follows: allowance for doubtful accounts, $5,000 credit balance January 1st, 2019. March 3rd, $1,250 debit. March 27th, $3,000 debit. April 12th, $125 debit. May 31st, $350 debit. $275 credit balance May 31st, 2019. What happens when management underestimates bad debt? As of 2019 continues, your company's estimate of bad debts turns out to have been too low. As you learn of new uncollectible accounts, you continue to credit accounts receivable and debit allowance for doubtful accounts, even if you go beyond the beginning balance of $5,000 as follows. Amounts are assumed. Allowance for doubtful accounts, $5,000 credit balance January 1st, 2019. March 3rd, $1,250 debit. March 27th, $3,000 debit. April 12th, $125 debit. May 31st, $350 debit. June 10th, $1,000 debit. August 31st, $200 debit. Balance August 31st, 2019, $925 debit. By year-end, allowance for doubtful accounts has a debit balance instead of a credit balance. A new year-end adjusting entry will reestablish a credit balance in the account. Recording bad debt expense for tax purposes versus book purposes. For tax purposes, the direct write-off method. Under the direct write-off method, which is required by the IRS for income tax purposes, bad debt expense is taken when the company determines that a particular receivable cannot be collected. This method cannot be used for book purposes under Generally Accepted Accounting Principles, or GAAP. Very small companies sometimes use this method for both tax and book purposes. For book purposes, the allowance method. Under this method, which is required by GAAP, there are two ways to account for bad debts. 1. Estimate bad debt as a percentage of credit sales. 2. Estimate the percentage of accounts receivable that will not be collected. 1. Estimate bad debt as a percentage of credit sales. Under this method, at year-end, management estimates the percentage of credit sales that it may not collect. This estimate is recorded as follows: debit bad debt expense, credit allowance for doubtful accounts. For 2019, LICO has a credit sales of $200,000. Based on past experience, the company estimates that bad debt loss for the year will be 2% of credit sales. LICO records its bad debt loss for book purposes as opposed to tax purposes for the year as follows: debit bad debt expense, $4,000. Credit allowance for doubtful accounts, $4,000 to record bad debt expense. At the end of each year or other period, LICO will record its estimate of bad debt with a debit to bad debt expense and a credit to allowance for doubtful accounts. 2. Estimate the percentage of accounts receivable that will not be collected. This estimate is based on aging receivables. The older accounts receivable are, the more likely they are to be uncollectible. Whatever the dollar amount of the estimate, it must become the ending balance in the allowance for doubtful accounts. Thus, recording bad debt expense under the percentage of accounts receivable method requires the following steps. 1. Find out from management what dollar amount of total receivables it does not expect to collect. This amount must become the ending balance in the allowance for doubtful accounts. 2. Check the current balance in the allowance for doubtful accounts to see how much it must be either increased or decreased to arrive at the required ending balance. The journal entry that you record for bad debt expense must give you the required ending balance in the allowance for doubtful accounts. When there is a credit balance in allowance for doubtful accounts. At year-end 2018, Huntington Inc. has accounts receivable of $90,000 and estimates that bad debt will be 5% of these accounts receivable. Thus, bad debt for the year is estimated at $4,500, $90,000 times 5%. Huntington's allowance for doubtful accounts has a current credit balance of $3,000. Therefore, Huntington must increase the balance by $1,500 to arrive at the required ending balance of $4,500. $3,000 current balance plus $1,500 increase equals $4,500 ending credit balance as follows: debit bad debt expense $1,500, credit allowance for doubtful accounts $1,500 to record bad debt expense. This is a fairly typical year-end adjustment, but as explained earlier, when more accounts receivable are written off during the year than management estimated, the allowance for doubtful accounts may end up with a debit balance. When there is a debit balance in allowance for doubtful accounts. During 2019, Huntington Inc. discovers that it significantly underestimated its bad debt. By year-end, the allowance for doubtful account has a debit balance of $2,000. At year-end 2019, Huntington has accounts receivable of $45,000 and estimates that bad debt will be 10% of accounts receivable, or $4,500, $45,000 times 10%. Because the allowance for doubtful accounts currently has a debit balance of $2,000, Huntington must add this $2,000 to the desired ending credit balance of $4,500 to determine the amount of the credit to the allowance for doubtful accounts. $4,500 desired ending credit balance plus $2,000 debit balance equals $6,500 credit to the account as follows. Debit bad debt expense, $6,500. Credit allowance for doubtful accounts, $6,500 to record bad debt expense. This entry can be illustrated with a T account. Amounts are assumed. Allowance for doubtful accounts. December 31st, 2019, before adjusting journal entries, $2,000 debit balance. $6,500 adjusting journal entries on December 31st, 2019, to produce the correct ending balance of $4,500 in the account required a credit of $6,500. $4,500 credit ending balance. $3,000 opening credit balance minus $5,000 debit balance from accounts actually written off during the year equals $2,000 debit balance on December 31st, 2019 before the adjusting journal entry is made. Bad debt is an expense on the income statement. The allowance for doubtful accounts appear on the balance sheet with total accounts receivable. The difference between accounts receivable and doubtful accounts minus allowance for doubtful accounts, is the net realizable value. This is the amount that the company expects ultimately to collect from customers. Just as accumulated depreciation reduces the book value of the asset, allowance for doubtful accounts reduces the book value of accounts receivable. A company has credit sales for the year of $100,000. Bad debt is estimated at 3% of credit sales. The allowance for doubtful accounts has a credit balance of $1,000. The adjusting entry at year end will include a debit to bad debt expense of $3,000. 3% times $100,000 equals $3,000 bad debt expense for the year. When bad debt is based on a percentage of credit sales, the adjusting entry is for the estimated amount regardless of the balance in allowance for doubtful accounts. A company has ending accounts receivable of $100,000. Its desired allowance for doubtful accounts is estimated at 4% of accounts receivable. Allowance for doubtful accounts currently has a credit balance of $1,000. The adjusting entry at year end will include a credit to allowance for doubtful accounts of $3,000. 4% times $100,000 equals $4,000 allowance for doubtful accounts at year end. Under the accounts receivable method for estimating bad debt, the ending balance in the allowance for doubtful accounts must be $4,000. $1,000 credit balance in the allowance for doubtful accounts plus $3,000 credit equals $4,000 desired balance. A company estimates bad debt at 2% of ending accounts receivable, which has an ending balance of $250,000. If allowance for doubtful accounts has a credit balance of $3,000, the adjusting entry to record bad debt will debit bad debt expense for $2,000. $250,000 times 2% equals $5,000 minus $3,000 current balance equals $2,000 increase required in the allowance for doubtful accounts credit balance. A company has ending accounts receivable of $100,000, of which it estimates that 4% will not be collectible. Allowance for doubtful accounts currently has a debit balance of $1,000. The adjusting entry at year end will include a credit to allowance for doubtful accounts of $5,000. 4% times $100,000 equals $4,000 desired balance in allowance for doubtful accounts. Under the accounts receivable method for estimating bad debts, the ending balance in the allowance for doubtful accounts must be $4,000. Currently, the account has a debit balance of $1,000, so a $5,000 credit must be added to yield the correct credit balance of $4,000. $4,000 estimate of bad debt expense required ending balance plus $1,000 debit balance equals $5,000 increase required. Thus, the allowance for doubtful accounts must be credited for $5,000. To illustrate with a T account, allowance for doubtful accounts, current balance $1,000 debit, $5,000 credit adjusting journal entry. Management estimated that bad debt would be $4,000 for the year. To achieve this ending balance, the account must be credited for $5,000. $4,000 credit ending balance. A company estimates bad debt at 2% of ending accounts receivable, which has an ending balance of $250,000. If allowance for doubtful accounts has a debit balance of $3,000, the adjusting entry for bad debt is a debit to bad debt expense for $8,000. $250,000 times 2% equals $5,000 final credit balance needed in allowance for doubtful accounts plus $3,000 current debit balance equals $8,000 increase or credit required in the adjusting entry. To illustrate in a T account, allowance for doubtful accounts, current balance $3,000 debit, $8,000 credit adjusting journal entry, $5,000 credit ending balance.